What's up, beautiful people? It seems like SoFi is taking a dump. The rest of the market took a dump after yesterday's FOMC meeting where we decided to halt raising rates. It seems like the rest of the market actually started to recover, but SoFi, for some reason, is still down 7% for the day. It's one of the few stocks that actually had a run-up that now retreated. A lot of people out there beg and pray for a retracement. And I guarantee you, those same exact people right now are shitting bricks to actually click, clack, pull the freaking trigger. Don't demonetize this channel. I'm talking about buying stocks, YouTube. And you're wondering what to do. At the end of the day, you can buy, you can sell, you could trade. I don't give a flying fizzle. None of this is advice. Personally, what I'm doing, I almost pulled the trigger earlier to buy some options, which I'm going to be sharing with my channel members. But for me personally, I'm going to see what's going to end up happening. Maybe there's still going to be a downside tomorrow as well. If, for example, tomorrow we also have a major downside, then I will be buying more into SoFi. SoFi has footings and fundamentals, and I guarantee you one thing, in my personal opinion, I guess I shouldn't say guarantee. When SoFi is going to reach GAAP profitability, SoFi is no longer going to be a $10 company. SoFi is no longer going to be a sub $10 company. I believe that SoFi is not only going to meet, but they're going to smash expectations. I could definitely see SoFi at the $12 to $15 range once they meet GAAP profitability at the end of this year. If you are curious or wondering if SoFi is in fact or not going to meet GAAP profitability, every single interview that SoFi has had, and I've been following their JP Morgan, their Morgan Stanley, I've been following their Piper Sandler, not only the CEO Anthony Noto talking, but also the CFO, they keep reiterating one thing: we will be GAAP profitable, not in quarter three, but quarter four of this year. When that happens, we're going to have that epiphany moment. We're going to have that to the moon moment. And I do believe that we are going to keep going higher. This all fugazi shit that Jerome Powell said that they're going to be raising rates 2 more times this year, that's not a fact. That's not a fact. He's just giving himself an out if something happens. Inflation is going down. And whether you like to believe it or not, federal funds rate inflation definitely affects banks, specifically SoFi, that is a hyper-growth bank. The closest competitor of SoFi is Ally Financial, that is also an online bank. However, about a month ago, they were valued twice SoFi. Now SoFi is valued more than Ally Financial. If I'm not mistaken, SoFi surpassed Robinhood recently as well. SoFi offers an extremely robust amount of products. Not only do they have short-term growth that was always here, essentially they were living off of the backs of personal loans. In the medium run, so that's the short term, in the medium run right now, they will have student loans, $200 billion TAM. This will increase and guarantee that they will be GAAP profitable in quarter four. This is not something that they were like banking on, pun intended, but it's happening. Finally, in the long term, which is 12 to 36 months, they have refinancing or financing for mortgages. They made an acquisition. I believe the company was called Winchester, something with a W, which is essentially a mortgage company, so they can actually give first-hand mortgages. Plus, SoFi has so much more room to grow in the future. Some people are seeing this as, oh my God, SoFi is done. But smart people are seeing this as a very big buying opportunity. I'm a little nervous to pull the trigger and buy my options at this downtrend, but if it continues tomorrow, I will for sure be buying options of SoFi, and I will be sharing that with my channel members. Guys, before I go any further, I wanted to let you know, very similar to what happened to Palantir, nobody gave a flying fizzle about Palantir, and all of a sudden Palantir is the darling of artificial intelligence. Nobody gave a flying fizzle about SoFi and fintech. It was all about PayPal, it was all about Hood, so on and so forth. But now SoFi is becoming the darling of fintech. And it's very similar to Palantir that started getting coverage from mainstream media. SoFi is getting it as well. This is an interview with TD Ameritrade, or not an interview, they did a segment on SoFi. I believe the segment came out yesterday, and the segment was really labeled FOMO Palantir was also on this segment before. The segment is literally called Fear of Missing Out, and they showcase SoFi. Guys, thank you so much. Please, if you guys want to join channel membership and you want to buy me one of these beautiful cups of coffee, I'm going to have a link down below. It's $3 a month. YouTube robs me for $1, but that's okay. And I get to keep $2. I have a link to that down below. And even if you don't become a channel member, which is quite all right, all jokes aside, please follow me on Twitter. I will leave a link to that down below as well. The Twitter community is growing like crazy. If I do get enough people that are following me, I will open the Discord back up, which I have a free Discord, but I will make it more interactive, so on and so forth. Thank you very much. Enjoy the rest of this show.
For FOMO, so we are looking at SoFi Technologies here, Alex, with shares up 112% now year to date. They're up 41% this month and almost 20% for the week.
Yeah, one of these sort of new age fintech companies, a lot of hype around it, has some meme stock elements at times around it. Maybe had a little bit of the stadium curse as well. I think a big name on the LA football team stadiums as well. Super Bowl played there, of course, but doing pretty good recently. Parabolic move, much like what we've seen in Palantir, names like Tesla and names like Nvidia. But not all of them created equal, Jenny. There's got to be news behind this, right?
There is news behind it. And I will say, I talked about an earlier note this week out of Truist, and I was not as optimistic as perhaps the analyst was, and I got absolutely torn apart on the internet because this name has its strong believers. And I think for that reason, this name with so much scrutiny right now and so much focus on SoFi, we are seeing a lot more analysts come and update their coverage on this name. But nothing but positivity today out of BTIG, calling the company a top pick among their financial technology companies. They did assume coverage with a buy rating and a $14 price target, which is higher than the average price target among analysts, which stands around $8 right now. They said that the shares, with the fact we have seen a nice lift, this is already on top of the fact that the stock has climbed over 100% this year. But despite even that rally, BTIG analysts said that SoFi is cheap compared to its peers based on its price to tangible book value, which is around 270. The analyst did note that SoFi's strong growth in members, its financial services products, and its aim to achieve profitability, which they anticipate the company will achieve in the fourth quarter of 2023. And I actually learned something there because the company is still guiding for profitability in their fourth quarter. I had previously misspoken, and actually they have outlined a pretty strong path to profitability that will be coming very soon, at least per management and per a lot of these analysts. So I so corrected. I was not saying this was not the future of finance. I'm not sure if you can necessarily make that claim, but I have looked into a lot of their balance sheet and their financials and actually was surprised to the upside with a name like SoFi. Now, this name has seen their loan origination volume fall about 47% as of last quarter. So that's another area of strength that has been overwhelmingly agreed upon among analysts, that once we see these student loan payments resume again, that this name will be a huge beneficiary of that, because that's 47% of their volume that was lost that could be expected to then be regained. So another area of strength, but this name, I mean, just in a really, really impressive rally, like I said, surging on the week, still down about 4% from its 52-week high. You zoom out, we are not close to all-time highs, but I definitely think when looking at this name, there's a FOMO feeling to the upside, and you've missed the rally if you've now been a part of this name just over the last 2 weeks, with shares up now 131% off their 52-week low.
Yeah, and I'll get to a trade illustration with that in mind just a second. A couple thoughts on this, though. You talked about the student loan kind of moratorium at least being perceived to be over now. At least there's a finite end, an agreement in place to get that back up and running. This is a company that would typically benefit from sort of action being taken within that, maybe refinances away from other sources, maybe into something like SoFi. But with rates so high, there may not be incentive right now to actually refinance some of those different loans that are outstanding that maybe have been sort of paused in payment. So that might be something to watch. But you mentioned about loan origination. Personal loan growth has been a huge strength for them, offsetting a lot of that weakness. But the one thing that hasn't really been stressed or tested yet for this company is what happens in a downturn economically. This isn't perceived as the most stable, highest necessarily credit. A lot of times this is younger borrowers. And so if you do have substantial recessionary time frame, deterioration in the economy, potentially uptick in unemployment rate, what is that going to mean for SoFi? How stable is their, I guess, exposure on the credit risk side because it hasn't been tested. And so the stock's obviously lost a ton of value, Jenny, but I think there is question marks as to, how exposed is this company potentially in an economic downturn? But those are questions that we won't have answered until if and when that ever happens.
That's such a good point, because I think that if this company were to endure a recession, what do their credit losses look like? What do things look like when the overall market continues to go south? Because to me, to say the company is the future of U.S. banking, you need stability to then be able to say you are truly the future of U.S. banking. But again, that is a wait and see situation, Alex, just something that I'm keeping on my radar going forward. But now trading this name here, shares are getting a nice lift today. They're up about 2.6%. Like I mentioned, having a really nice couple of trading sessions. And there are, I definitely say, a choir of bullish analysts right now praising this name, just given its positioning with these student loans resuming.
Yeah, no doubt. And the analyst in particular that we were referring to today that likes this name, I believe, had a $14 price target for SoFi. And so just holding that in mind, I mean, yeah, it'd be a massive rally upwards of 40%, but this stock can move in a hurry, and it's proven that. And so if you believe that that's possible, maybe by the middle of August or so, I looked at a strategy that would benefit from that. July, August, 14 call calendar. This is a name that right now, I guess George would talk to us a little bit about sort of investing stocks versus trading stocks. And I wouldn't put words into his mouth, but I could say that with the volatility that's surrounding this name, at least right now, you can certainly see the attraction someone may have from a trading standpoint. Not to get into the specifics on whether or not it's a positive or not an investment vehicle, but just from a trading standpoint, anytime a stock is moving around as much as this one has recently, it's going to garner attention. It certainly has. And so looking at a strategy that is relatively speculative in what it was asking for the stock to do, but doing so in a very controlled risk way, only taking $20 in risk on this for an upside shot at around 14 rather, for that strike here on the call calendar. Beauty of this is very customizable. You got a different opinion, a different outlook, different price target. As long as there's strike availability, you can act on that in that way. But with this one, Jenny, I just looked at the analyst price target, simply use that for the benchmark here on this one. But really, we talked about it every time we've looked at these kind of calendar spreads. It's more about precision, more about accurately projecting the stock price and where it'll be, throughout the duration of this particular trade, as opposed to directionally being right or wrong.
Yeah, I think that's really well put. And of course, considers the fact that this is a volatile name in nature. It has swung to massive heights as of late, but of course, it had been beaten down pretty significantly over the last 12 months. But we will leave it there for Fomo.